The income statement. What is it, and how do we prepare one like a pro? The income statement is also known as the profit and loss, also known as the how much money did I make statement. It's the statement that I've referenced in previous videos talking about how too many business owners ask as their first and oftentimes only question, how much money did I make? This is the statement that answers that question. And on the surface, the statement it can be very simple, right? Like I showed you in the write-up, profit minus expenses equals net income. Income, the revenue, the money that I've earned based on the services that I offer and or the products that I sell, right? That's how I derive revenue. Take that and subtract the expenses that I had to incur in order to get that revenue produced, right? So I might need to rent an office. I have rent expense, so I need to spend money on rent in order to have an office so I can do whatever it is that I do to get the services and products that I sell sold, right? So bottom line, revenue takes expenses. We got to spend money to make money. It's really what it comes down to. That's kind of what the profit and loss ultimately tells us. So what should we do about creating one? What does it look like? First of all, it's important to note that the profit and loss is essentially driven by the accounts that are on your chart of accounts. In fact, your chart of accounts is really the list of accounts that make up everything that's on both the profit and loss and the balance sheet. So let's see how we can sort of start to put together a profit and loss statement. The first clue that I mentioned is how we derive revenue, how we earn revenue. So we're going to invoice a customer, right? So let's go into Always Write, and let's create an invoice. Okay, and we're going to choose a product or service, right? Let's just go with accounting services, right? And we're going to bill them for $5,000 in accounting services. And what I'm going to do here is let's quickly duplicate the tab here so I can run the profit and loss before I save it. I want to show you that I've got no tricks up my sleeve. We'll go over to reports here. I'll run a profit and loss. I'm going to just run it for all dates so that when I run that, you can see there's nothing in here, right? There's no income or expenses just yet. Let's hit save and close. And now we'll refresh our profit and loss or our income statement, and there's my income. So you can right away after recording one transaction see how the profit and loss or the income statement begins to take shape. Let's say now my customer says, hey, Seth, this bill for $5,000 is ridiculous. I shouldn't be paying $5,000 for what you did. It should be something less. So I say, you know what? You're right. I probably charged you a little more than I should have. I'm going to give you a good faith discount on, just this once, right? So what we'll want to do is we'll want to, let's say I've recorded the invoice and let's say he's already paid it, right? Or better yet, he hasn't paid it yet. So now I just want to show a discount, but I don't want to just, reduce the amount that I bill him. I want to show that originally it was $5,000 and that I gave him a discount. I want the numbers to tell the story of what actually happened, right? So let's go into create a new transaction and we'll create a credit memo. And the credit memo will go to Always Write. And let's create a new service item, and we'll call it discount. But instead of going to the accounting fees account, I want to go to a different account with it. So let's go back over here where I can actually go to the chart of accounts and add something. So we get to the chart of accounts, and I want to add a new account. And what we're about to create is what's called a contra income account, right? Wow, that's weird. It's almost like it knew what I was going to try and create. Let's call this sales, returns, and allowances. And it's going to be contra income because it's going to be a negative line item in the income. It's contra. It goes against income, right? So now that I've got that in here, there's my sales, returns, and allowances. This is one of those dialogues in QuickBooks Online where you can't add a new account from within here. But the good news is it's easy, as you just saw, to go into another tab, add it, and then I didn't even have to hit refresh. It just finds it. So let's hit save and close, and we'll just say good faith because the customer is always right. And let's say we're knocking off 10%. So we're going to say the quantity that we're giving it based on is 5,000 because that was the total of the invoice, right? Minus 0.1 is the rate. And that way we get a minus 500. And I like to do things. I could have just put, negative 500 on here. But I like doing it this way too, so I can show very clearly, what it's all based on. So we'll say save and close. Oh, duh, this is a credit. So we don't need to do it as a negative. So I take that back. I just do 0.1. And save and close. And it says one payment was made. So it automatically applied it. It figured out there's only one invoice out there. It was to the same customer as the credit memo. So notice it's $4,500. So QuickBooks Online is smart like that. It applied it. So now there's amount received $500 and he only owes $4,500. But let's see what that looks like on the profit and loss. Let's go to reports, profit and loss. Remember to run it for all dates. And here we go. So we have accounting fees, less sales returns and allowances. So our gross revenue is $5,000. Our net revenue is $4,500. Now, we're going to incur expenses along the lines of things that I mentioned near the end of the write-up. A lot of times especially when you're dealing with, finance and potential investors in a company, they want to see what's called EBITDA, earnings before interest, taxes, depreciation, and amortization. Right? So those kinds of things we might want to set up, if I go back to my chart of accounts, as what's called other expenses. So when I choose what type of account I'm going to create, and again, this is QuickBooks Online, which is what I'm always using as the accounting software, I can say instead of expenses, I want other expense. And notice it comes up, the detail types, it kind of, comes up with some of the typical things like amortization or depreciation. But I could put other miscellaneous expense as my detail type. And over here, I might want interest, right? Because if I have interest expense, maybe I look at interest as something that's not really the normal course of my business. I'm not in the business of borrowing money for a living. So, and if I want to be able to show EBITDA, so I can show my operating income before the interest expense, then this is how you do it. You put it into other expenses. That's going to force it to show up below the line or below the operating profit. And I'll show you what this looks like. Let's hit save and close. And let's quickly create a transaction. Let's say I wrote a check to the bank for the interest. Let's say I had a line of credit and I just paid the interest, right? So we'll record an expense. And the pay will be bank, or we'll just call it iBank. My clever little names that I like to use. Okay, down here we'll have interest expense. Just make sure that's the right one. And let's say I paid $250 in interest. Save and close. And now let's go run the profit and loss. Back to the summary. So now do you see what happens? It shows I have my $5,000, my $4,500 net revenue. Right? I have no regular expenses so far, so my operating income or my operating profit is $4,500. Then here we have the below the line items, right? So this would be my EBITDA if I choose to set up my chart of accounts that way. So that if I wanted to set my accounts up that way, then the things that would need to go in there would be interest, taxes, depreciation, and amortization, right? Those I would have to set up when I create them in my chart of accounts as other expenses. This way, this would essentially represent what that EBITDA number really means. So again, how we structure the chart of accounts, and for that matter, what that's going to look like when it shows up on the profit and loss, is really entirely up to you, right? Retail outfits are kind of what I was illustrating a little bit in the write-up in terms of companies that have very, very detailed, potentially, profit and loss statements. And if you do a Google search on some of your favorite online publicly traded retailers, you'll start to get a sense that initially you'll get a very simplified version of the profit and loss. These are the published, these are the ones that are published for the public because they're publicly traded companies. So it's public information. But you can get a sense of what some of these big companies' financial statements look like and how complex they can get in some cases. So that, my friends, is really kind of the best I can do for you without knowing specifically what kind of business you have in terms of helping you understand or begin to understand how to put together your income statement. As always, I hope you learned something and had some fun along the way. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.